Hey everyone! Today, we're diving into NIO upcoming second quarter earnings report for 2024, which is set to be released on Thursday, September 5th, 2024, before the market opens. There are several key factors to consider as we approach this highly anticipated report. First and foremost, we can confidently say that NIO vehicle deliveries for this quarter were exceptional, reaching an all-time high of 557,373 units, representing a staggering 143.9% year-over-year increase. This substantial growth in deliveries will undoubtedly translate into impressive year-over-year figures, setting the stage for a potentially record-breaking quarter in terms of revenue. With such strong delivery numbers, it's almost certain that NIO will report record quarterly revenue, the highest ever for the company. The question on everyone's mind, however, is whether these stellar results will be enough to trigger a short squeeze. To understand this, we need to delve deeper into the other critical aspects of NIO financial performance. One significant factor to consider is the impact of incentives offered during the second quarter. NIO implemented several incentives to boost sales, and it's essential to assess how these incentives might affect the company's earnings. The most notable incentive was related to the Battery as a Service BOZ program. Under this offer, customers who paid for 4 months of BOZ received the 5th month for free. However, this incentive doesn't have an immediate financial impact on NIO, as the company only covers the cost of the 5th month after the customer has made 4 payments. Moreover, the cost of BOZ is relatively low, amounting to only 700 RMB per month per car, which translates to approximately $100. Given these figures, the financial impact of this incentive on NIO earnings is minimal. Another incentive that NIO offered was 10,000 RMB worth of free vehicle specification specs, which could slightly impact profit margins. While this incentive provided customers with added value, it did come at a cost to NIO. However, it's important to note that such incentives are part of the company's strategy to attract and retain customers. In addition to the specs incentive, NIO also provided 40 free battery swap vouchers to customers. Similar to the BOZ incentive, this offer doesn't have an immediate financial impact, as the expense is incurred only when customers use the vouchers. Therefore, the effect on NIO earnings for this quarter is expected to be minimal. Another noteworthy incentive was the 1-year free NIO Pilot NOP+, an advanced driver assistance system. Like the other incentives, this offer doesn't have a direct financial impact on NIO earnings. The company incurs the cost of providing this service, but it doesn't affect the immediate financial results. One incentive that might have a more noticeable impact on NIO earnings is the free NIO phone promotion. During April and May, NIO offered a free NIO phone with every vehicle purchase. While the cost of providing free phones isn't negligible, it's worth considering that this incentive was only available for a limited time and only applied to a portion of NIO deliveries during the quarter. Additionally, NIO offered substantial discounts on inventory vehicles, particularly those from the 2023 model year. These discounts ranged from 6,000 RMB to 36,000 RMB, depending on the vehicle and its specifications. This strategy helped NIO clear out older inventory, but it also reduced the company overall revenue per vehicle. When combined with the free specs incentive, these discounts resulted in significant savings for customers, which could impact NIO profit margins. Beyond incentives, it's crucial to examine NIO cash position. As of March 31, 2024, following the first quarter, NIO had a cash balance of $6.3 billion. This represented a significant decrease from the $8.1 billion reported at the end of December 2023, indicating a nearly $2 billion reduction in cash reserves over the first quarter. The question now is how NIO cash position has evolved during the second quarter. Several factors contributed to NIO cash depletion in Q1, and these same factors are likely to have continued to impact the company finances in Q2. First and foremost, NIO is actively expanding its presence in the United Arab Emirates UAE, a market with substantial growth potential. Expanding into a new market involves significant expenses, including marketing, infrastructure, and staffing costs. Another major factor is the soft launch of the Onvo brand, which began on May 15, 2024. The soft launch included increased marketing efforts and the establishment of sales networks, all of which come with substantial costs. While these investments are essential for the long-term success of the Onvo brand, they represent a significant drain on NIO cash reserves in the short term. Additionally, NIO has been building new stores and hiring sales representatives, further adding to the company's expenses. One of the most significant expenditures during the first quarter was related to the construction of new factories. NIO is in the process of building Factory 3 and Factory 4, which will be critical for meeting the growing demand for its vehicles. However, these construction projects require substantial financial resources, and it's challenging to predict the exact impact they will have on NIO cash position in Q2. It's also worth noting that NIO has plans to build a third factory dedicated to battery swap stations, although this project will primarily impact Q3 and Q4. In addition to these factors, NIO has ramped up its marketing activities, including hosting comparison events with competitor vehicles, such as BMW. These events involve inviting BMW owners to test drive NIO vehicles and attend exclusive dinner parties, showcasing the superiority of NIO products. While these marketing efforts are essential for increasing brand awareness and customer loyalty, they come at a significant cost. Given all these expenses, the question remains, will NIO stock experience a short squeeze? The answer largely depends on the company losses for the second quarter. In Q1, NIO reported a loss of approximately $700 million, a substantial figure. If Q2 losses exceed this amount, it's unlikely that a short squeeze will occur. However, if NIO can reduce its losses to a more manageable level, such as $300 million or $400 million, it could create a more favorable environment for a short squeeze. Another critical factor to consider is NIO cash position at the end of Q2. If the company manages to preserve a significant portion of its cash reserves, it will alleviate concerns about potential dilution or fundraising efforts. Conversely, if NIO cash balance continues to dwindle at a rapid pace, it could raise alarm bells among investors and hinder the possibility of a short squeeze. Despite the uncertainties surrounding NIO financial performance, one thing is almost guaranteed. The company will report record revenues for the second quarter of 2024. The combination of strong vehicle deliveries, ongoing global expansion, and the development of new factories and the Onvo brand is expected to drive significant revenue growth. As we await the earnings report, it's essential to remain cautiously optimistic. While NIO future looks promising, the company's ability to manage its expenses and minimize losses will be crucial in determining whether it can trigger a short squeeze. The upcoming report will provide valuable insights into NIO financial health, and we can only hope for positive results. What are your expectations for NIO Q2 earnings? Let me know in the comments below. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.